The first time Marcus dismissed my business opinion, I was 19 and he was 27. We were at Dad's retirement dinner, and Marcus had just closed his first major contract for his fledgling logistics company. He spent 40 minutes explaining his business model to the table while I ate my salmon quietly. "What do you think, Rachel?" Dad had asked me, probably out of politeness. "The pricing structure seems tight," I'd said carefully. "But maybe consider building cash reserves before expanding the fleet? In case fuel costs spike or—" Marcus had laughed, cutting me off. "Stick to your college classes, Rach. Business strategy is a bit more complex than Econ 101. Everyone had chuckled. I'd gone back to my salmon. That was 14 years ago. I was now 33, Marcus was 41, and the pattern hadn't changed. He'd built Martech Logistics from a 3-truck operation into what he claimed was a $400 million empire. He had 340 employees, operations in 12 states, and a corner office with a view that he never failed to mention. I ran a small financial consulting firm from a modest office in downtown Seattle, working with mid-sized companies on growth strategy and capital management. I had 6 employees, serviceable profits, and a business model Marcus found endlessly amusing. "Still doing the consulting thing?" he'd ask at family gatherings, the way you'd ask a child if they were still playing with dolls. What Marcus didn't know, what nobody in my family knew, was that I'd made my first $10 million by age 25 through a series of prescient tech investments. By 30, I'd built that into $340 million through careful portfolio management, strategic angel investing, and one particularly lucrative early position in a cloud infrastructure company that had gone public at a $12 billion valuation. I lived modestly, worked quietly, and never discussed my actual financial position. My consulting firm was real but small, more of a professional cover than a primary income source. My actual work was managing my substantial portfolio and serving as a silent partner in several high-growth companies, including my brother's. 8 years ago, Martech Logistics had hit a crisis point. Marcus had expanded aggressively, overextending his credit lines and operating capital. He needed $180 million to avoid collapse, to cover his fleet expansion debt, to finance his facilities, to maintain operations while he restructured. His bank had quietly sought private investors. Through a complex network of LLCs and investment vehicles that my lawyers had carefully structured, I'd become that investor. The terms were generous. 12% annual return, no board seat, complete anonymity, and a strategic advisory role that Marcus never knew came from his silent partner through his financial advisor. For 8 years, I'd watched him build success on my capital while being told at every family gathering that I didn't understand real business. The family meeting was at Marcus's house, a sprawling estate in Bellevue that he'd purchased 3 years ago. All 18 family members were gathered for what Marcus had called an important announcement. We sat in his professionally decorated living room, catered appetizers on glass tables, wine flowing freely. Marcus stood at the front like a CEO addressing shareholders. "I wanted you all here to share some incredible news," Marcus began, beaming. "Martech Logistics has attracted acquisition interest from 3 major firms. We're looking at valuations between $850 million and $1.1 billion. The room erupted in applause. Dad was beaming with pride. Mom was crying. Marcus's wife Jessica was recording on her phone. "This is the culmination of 8 years of strategic vision, aggressive growth, and calculated risk-taking," Marcus continued. "When I started this company 13 years ago with 3 trucks and a dream, people doubted. But I understood something they didn't. I understood leverage, I understood scale, I understood timing." I took a sip of wine and said nothing. "The acquisition should close within 6 months," Marcus said. "Which means this family is looking at generational wealth. My equity stake alone is worth between $600 and $750 million. We're talking about setting up our kids, our grandkids, creating a legacy." More applause. My cousin David raised his glass. "To Marcus, the family's first near-billionaire." Everyone drank except me. I was doing calculations in my head. If Marcus's equity was worth $600 to $750 million at those valuations, and I knew the actual capital structure of his company, he was significantly overstating his position. His equity was worth maybe $200 to $280 million before taxes, accounting for the debt load and the silent partner position that represented 51% of the company's actual value. "Rachel, you're quiet," Marcus said, turning his attention to me with that familiar patronizing smile. "No congratulations for your big brother?" "Congratulations," I said evenly. You know, you should take notes, he continued, and several people chuckled. This is what strategic business building looks like. Not small consulting contracts, but real empire building. Understanding capital markets, understanding scale, understanding. I'm familiar with capital markets, I said quietly. Right, your little consulting firm, Marcus said, grinning. How's that going? Still working out of that strip mall office. It's actually a downtown building, and yes, it's going fine. See, that's the difference between small business thinking and real entrepreneurial vision, Marcus said, addressing the room now. Rachel does fine. She makes a comfortable living. There's nothing wrong with that. But when you think big, when you understand how to leverage capital, when you know how to... Marcus, maybe we should talk about your capital structure, I interrupted. The room went quiet. Marcus looked annoyed. What? Your capital structure. Debt-to-equity ratio, investor positions, actual versus claimed equity stakes. Those details. Marcus's smile became fixed. I'm not going to bore everyone with technical details at a celebration, Rachel. Because the numbers you're citing don't account for your debt load or your silent partner position, I continued calmly. If you're claiming $600 to $750 million in personal equity at those valuations, you're either overstating your ownership percentage or not accounting for outstanding obligations. The room was very quiet now. Marcus's face had reddened. Stick to your little side projects, Marcus said, his voice tight with barely controlled anger. Real business is beyond you. This is sophisticated corporate finance, not the kind of small-time consulting you do. I understand, I said, nodding. No, clearly you don't, Marcus continued, his frustration showing. You've never built anything significant. You've never managed serious capital. You've never. Rachel, I love you, but you're embarrassing yourself trying to lecture me about my own company. These are acquisition talks with Fortune 500 firms. This is the big leagues. Dad intervened. Marcus is right, honey. This is pretty specialized stuff. Let's just celebrate your brother's success. I smiled politely and went back to my wine. My phone buzzed in my pocket. A text from Marcus's financial advisor, Theodore Chin, who'd been serving as the intermediary between me and Martech Logistics for 8 years. Need to speak with you urgently. Marcus is making statements about valuation that suggest he doesn't fully understand the capital structure. Should I clarify? I excused myself to the bathroom and called Theodore back. Miss Chin, thank you for calling. I'm at Marcus's celebration dinner, and he's announcing acquisition talks with valuations that seem inconsistent with reality. What's he claiming? $850 million to $1.1 billion total company valuation, with his personal equity worth $600 to $750 million. Theodore was quiet for a moment. Miss Chin, you know the actual structure. You hold 51% through the LLC network. At those valuations, your position would be worth $433 to $561 million. Marcus's equity, accounting for debt, would be worth $180 to $240 million before taxes. He's either significantly overstating his ownership or not accounting for the silent partner position. He doesn't know about the silent partner position, I said. You've maintained the anonymity protocol? Absolutely. All communications go through me as the financial advisor. He thinks the silent partner is a consortium of institutional investors. But Miss Chin, these acquisition talks are real. I've seen the preliminary term sheets. If they move forward, the capital structure will become public. Marcus will discover that his sister owns 51% of his company. When? During due diligence, probably within 60 days if talks progress. The acquiring company will require full disclosure of all ownership positions. I see. May I speak candidly, Miss Chin? Please. I've worked with you for 8 years managing this investment. I've watched you provide the capital foundation for Martech Logistics while your brother takes credit for building it alone. I've facilitated your strategic guidance through anonymous channels while watching him dismiss your business acumen at family functions. And now he's about to discover that his younger sister, whom he considers financially naive, has been his majority stakeholder since 2016. Your point. Are you prepared for that revelation? Because it's going to be explosive. I'm prepared, I said. In fact, Theodore, I think it's time to accelerate the timeline. I'd like to execute my withdrawal rights under the partnership agreement. Silence. Then, Miss Chin, that would trigger a forced liquidation event. Marcus would have 90 days to buy out your position at fair market value or agree to company sale. Given his actual equity and debt load, he can't afford to buy you out. It would force the acquisition talks to accelerate or force him to find alternative investors at much worse terms. I understand the implications. May I ask what precipitated this decision? I'm tired of being invisible while providing the foundation for someone else's ego, Theodore. 8 years of stick to your little projects while building his empire with my capital. I'm done. When would you like me to initiate the withdrawal process? No. Tonight. File the formal notice with the company's corporate counsel. I want Marcus to receive it first thing Monday morning. Miss Chin, this is going to destroy your relationship with your brother. Theodore, I don't think we've had a real relationship. We've had a dynamic where he dismisses me while unknowingly depending on me. That's not a relationship worth preserving. Understood. I'll begin the paperwork immediately. You should know that under the partnership agreement, Marcus will have 7 days to respond once he receives notice. During that period, he can request a meeting with the silent partner. Do you want to maintain anonymity during that process? No. When he requests the meeting, tell him the truth. Tell him who's been his silent partner for 8 years. I'm done hiding. I hung up and returned to the celebration. Marcus was holding court, describing his business strategy to an enthralled audience. I sat quietly in the corner, finishing my wine. The party continued for another 3 hours. I left without saying much beyond polite goodbyes. Marcus was too busy celebrating to notice. Over the weekend, my lawyers finalized the withdrawal documentation. On Monday morning at 9:47 a.m., Marcus's corporate counsel received the formal notice. The silent partner who owned 51% of Martech Logistics was exercising their withdrawal rights under the 2016 partnership agreement. Marcus had 7 days to respond with either a buyout offer at fair market value, $433 to $561 million based on current acquisition interest, agreement to accelerate company sale with proceeds distributed per ownership percentages, alternative financing to replace the silent partner position. Marcus called me at 10:23 a.m. I didn't answer. He called again at 10:31, 10:45, 11:02, 11:28. I silenced my phone and continued my Monday morning routine. Coffee, email review, portfolio analysis. At 2:15 p.m. Theodore called. Miss Chin, Marcus knows. His lawyer explained the partnership structure, the ownership percentages, the withdrawal rights. He's requesting an emergency meeting with the silent partner. He doesn't know it's you yet, but he knows someone owns 51% of his company and is pulling out. He's not handling it well. Tell him the meeting can happen Wednesday at my office. 10 a.m. Should I tell him who he'll be meeting with? No. Let it be a surprise. Tuesday was quiet. My phone showed 47 missed calls from Marcus. Text messages ranged from confused, "Who is the silent partner? Why didn't you tell me someone owned half my company?" to angry, "This is corporate sabotage. My lawyers will fight this." to desperate, "Please call me back. I need your help figuring this out." I responded once at 9 p.m., "I'll see you Wednesday at 10 a.m. at my office. The silent partner will be there." Wednesday morning I arrived at my office at 8:30 a.m. My assistant Sarah had cleared my schedule. Theodore arrived at 9:45 a.m. with his briefcase full of documentation. At 9:58 a.m. Marcus's Mercedes pulled into the parking lot. He walked into my office building with his lawyer, a corporate attorney named David Brenner whom I recognized from previous dealings. They looked confused to be meeting at my small consulting office. Sarah directed them to our conference room. I waited until exactly 10 a.m. then walked in with Theodore. Marcus's face went through several expressions in rapid succession. Confusion, recognition, more confusion, and then slowly dawning horror. "Rachel, what are you doing here? Where's the silent partner?" I sat down across from him. "Hi Marcus. I'm the silent partner." He stared at me. "That's not funny." "I'm not joking." I slid a folder across the table. "These are the corporate documents from 2016 showing the LLC network that owns 51% of Martech Logistics. The trail leads to me. Theodore has been serving as intermediary for 8 years per the anonymity protocols in the partnership agreement." Marcus's lawyer, David, was already reviewing the documents. His face confirmed everything. "This is impossible," Marcus said. "You don't have this kind of money. You run a small consulting firm. I built a $340 million portfolio over the last 15 years through strategic investing," I said calmly. I've been an active angel investor in 17 companies. I've served as a silent partner in 9 ventures. Martech Logistics was my largest single investment at $180 million in 2016 when you were facing bankruptcy. But the bank said it was institutional investors. A consortium. The bank said what I told them to say. Through Theodore, I structured complete anonymity. You've been operating under the impression that you owned 85% of your company. In reality, you own 38% after accounting for debt conversion. I own 51%. The remaining 11% is held by your early employees through the equity compensation plan. Marcus looked physically ill. 8 years. You've owned half my company for 8 years and never said anything. I provided $180 million to save your company from collapse. I took a 12% annual return, which is below market for growth capital of that risk level. I asked for no board seat, no public recognition, no involvement in operations beyond strategic guidance that Theodore passed along anonymously. I've been the foundation of Martech Logistics' success while you've spent 8 years telling me I don't understand real business. Why? His voice was barely above a whisper. Because 8 years ago you were my brother and you needed help. I had the capital. I believed in your vision even if I thought your execution needed work. So I structured an investment that would save you without embarrassing you by revealing that your little sister was your financial savior. And now you're destroying it all? You're pulling out and forcing a liquidation event. I'm exercising my rights under a legal partnership agreement. You have 3 options. Buy out my position for fair market value, agree to accelerate the acquisition talks with proceeds distributed per ownership percentages, or find alternative financing. David, the lawyer, spoke up. Mr. Chin, given your actual equity position and debt load, option 1 isn't financially viable. You can't raise $433 to $561 million to buy out your sister's position. Option 3 is similarly problematic. No institutional investor will provide that capital at terms you can afford on a 90-day timeline. Which leaves option 2. The acquisition, Marcus said flatly. The acquisition, I confirmed. Which proceeds with both of us as equal partners in the negotiations. You own 38%, I own 51%. At the valuations you announced at your party, $850 million to $1.1 billion, your net position would be approximately $180 to $240 million before taxes. My position would be $433 to $561 million. The numbers were clearly crushing him. You're going to make more than twice what I make from the company I built. From the company we built, Marcus. You provided vision and operations. I provided 51% of the capital that made that vision possible. This is a partnership even if you didn't know it until now. So what happens? We just sell the company? And everyone finds out that my little sister owns more of Martech than I do. During due diligence, yes. The acquiring company will discover the full ownership structure. Your friends, your colleagues, your employees, they'll all learn that you've been operating with a majority partner you didn't even know about. Marcus put his head in his hands. His lawyer looked uncomfortable. Why now? Marcus asked finally. If you've been fine staying silent for 8 years, why reveal yourself now? Why blow up the acquisition talks? I'm not blowing them up. I'm participating in them transparently. As for why now, on Saturday you told me to stick to my little side projects. You said real business was beyond me. You've said versions of that for 14 years. I'm tired of it, Marcus. I'm tired of being dismissed while providing the foundation for your success. I'm tired of you claiming sole credit for building something that wouldn't exist without my capital. So this is revenge. You're humiliating me because I hurt your feelings. I'm enforcing the legal reality of our business relationship because I'm done pretending your perception matches reality. You don't own Martech Logistics, Marcus. We do. And it's time you acknowledge that. Theodore spoke up quietly. Mr. Chin, for what it's worth, your sister has been an extraordinary partner. Every major strategic decision you've made over the last 8 years, the fleet automation, the logistics software development, the regional expansion strategy, those came from recommendations she fed through me. You thought they were coming from financial advisors or consultants. They were coming from Rachel. Marcus looked stricken. The automation project? That was your idea. Yes. You told me at Dad's birthday 3 years ago that automation was a tech fad for people who didn't understand the logistics industry. 2 months later, Theodore suggested you explore fleet automation. You thought it was his idea. It saved you $22 million annually. The software development? Wine. You said at Thanksgiving 2 years ago that proprietary software was unnecessary overhead for a logistics company. 1 month later, Theodore recommended the development project. It's now your competitive advantage and a major driver of your acquisition valuations. Marcus was shaking his head slowly. Everything? Every strategic decision that actually worked. Not everything. You've made good operational decisions. You're excellent at client relationships and team management. But the capital allocation, the strategic positioning, the growth strategy, that's been me channeled through Theodore while you've been telling me I don't understand business. So what do you want? An apology? Public acknowledgement? I want honesty in our business relationship going forward. The acquisition talks continue with both of us at the table as partners. We split proceeds according to our ownership percentages. And you stop dismissing my business acumen because I've been demonstrating it for 8 years while you weren't paying attention. David cleared his throat. Mr. Chen, I'd recommend we agree to Ms. Chen's terms. The partnership agreement is ironclad. She has the legal right to force this situation. Fighting it would only delay and complicate the acquisition, potentially killing the deal entirely. Your best path forward is cooperation. Marcus looked at me with an expression I'd never seen before. Something between respect, humiliation, and anger. The family is going to find out. Dad, Mom, everyone. They're all going to know that my little sister owns more of my company than I do. Yes. They're going to know I've been taking credit for success that was partially yours. Yes. I'm going to look like an idiot. The brilliant entrepreneur who didn't even know who his majority partner was. Probably. He was quiet for a long moment. I've been an ass to you for 14 years. Yes. I'm sorry. He looked up, meeting my eyes. I'm genuinely sorry, Rachel. I should have listened. I should have respected your opinions. I should have. He stopped. This whole time, you were smarter than me and I was too arrogant to see it. You're not stupid, Marcus. You built something valuable. You just didn't build it alone and you need to acknowledge that. Okay. He took a deep breath. We proceed with the acquisition as partners. Full transparency. You get your 51%, I get my 38%. We split the credit publicly. We acknowledge reality publicly. You built the operations. I provided the capital and strategy. Both were necessary. Neither alone would have succeeded. David pulled out a document. I'd recommend we formalize this agreement immediately. Ms. Chen withdraws her liquidation notice contingent on Mr. Chen's cooperation in the acquisition process and public acknowledgement of the partnership structure. Both parties commit to transparent dealings with the acquiring firm. We spent the next 2 hours working through the details. By 12:30 p.m. we had a signed agreement. The acquisition talks would continue with both of us involved. The ownership structure would be disclosed during due diligence. We'd present as business partners, not just siblings. As Marcus was leaving, he turned back at the door. That automation project that saved $22 million annually. How did you know it would work? Because I'd invested in 3 other logistics companies that had implemented similar systems. I'd seen the data. I knew the ROI. And the software development? I angel invested in the firm we ultimately hired to build it. I knew their capabilities. So this whole time, you've been building expertise in my industry while I thought you were just running a small consulting firm. Yes. He shook his head slowly. I really have been an idiot. You've been dismissive. There's a difference. After they left, Theodore stayed behind. That went better than I expected. I thought he might become combative. He's processing. The anger might come later. Perhaps. But Miss Chen, for what it's worth, you handled that with remarkable grace. You could have humiliated him much more severely. I don't want to humiliate him, Theodore. I want him to see me clearly. There's a difference. The acquisition talks proceeded over the next 90 days. Marcus and I attended meetings together, presented as business partners. The acquiring firm, a Fortune 500 logistics conglomerate, conducted thorough due diligence. When they discovered the ownership structure, the silent partner who'd owned 51% for 8 years, they were fascinated rather than concerned. It demonstrated sophisticated capital management and strategic patience. The final valuation came in at $980 million. My 51% stake was worth $499.8 million before taxes. Marcus's 38% was worth $372.4 million before taxes. The remaining 11% went to employees through the equity plan. The press release announcing the acquisition mentioned both of us as co-founders. Marcus gave interviews where he credited strategic partnership with sophisticated investors for the company's success. He didn't hide my involvement, but he also didn't broadcast the family connection initially. The family found out anyway, of course. Mom called me 2 weeks after the announcement. Rachel, honey, I just saw the acquisition announcement. It says you owned 51% of Martech Logistics? Since 2016. Yes, Mom. But where did you get $180 million? I built a portfolio over 15 years through careful investing. I've been much more successful financially than I've let on. Why didn't you tell us? Would you have believed me? Marcus didn't believe my business advice was worth listening to. Neither did Dad. I figured my capital could speak louder than my words. She was quiet for a moment. You made more from the acquisition than Marcus did. I own more of the company than Marcus did. That's how equity works. He's having a hard time with it. His ego is bruised. His ego needed bruising, Mom. He's been dismissing me for 14 years while unknowingly depending on my capital and strategy. Maybe this is educational. You could have told him sooner. You didn't have to let it be such a shock. I provided 8 years of anonymous support at below-market returns. I asked for nothing except consistent performance. He chose to spend those 8 years telling me I didn't understand real business. The shock is a natural consequence of his own assumptions. You're being cruel, Rachel. I'm being honest, Mom. There's a difference. Dad's reaction was more complicated. He called the next week and asked to meet for coffee. I owe you an apology, he said without preamble. I've been proud of the wrong kid for the wrong reasons. Marcus built something impressive, but you financed it. You made it possible. And we've all been treating you like you didn't understand business while you were demonstrating sophistication none of us recognized. Thank you for saying that, Dad. How did you do it? How did you build that kind of wealth without any of us noticing? I lived modestly, invested wisely, and didn't broadcast my success. You all saw what you expected to see, the younger daughter with the small consulting firm. You never looked closely enough to see what I actually was. Which was someone who understood capital markets better than anyone else in this family. Someone who had the resources to save her brother's company and the humility to do it anonymously. Someone who valued results over recognition. Until you didn't anymore. Until I got tired of being invisible while providing the foundation for someone else's visibility. Yes. He nodded slowly. Marcus tells me you could have destroyed him. Forced liquidation killed the acquisition, left him with nothing. But you structured it so he still comes out with $372 million. I never wanted to destroy him, Dad. I wanted him to see me. There's a difference. He sees you now. We all do. The money transferred in December. After taxes, I netted approximately $312 million from the acquisition, bringing my total portfolio to roughly $652 million. Marcus netted approximately $233 million after taxes, still an extraordinary outcome. We're not close now. We're cordial at family gatherings, professional when we need to interact. He's building a new venture with his proceeds, a logistics technology company. He hasn't asked me to invest. I've moved into a slightly nicer apartment, though still nothing flashy. I'm exploring new investment opportunities, serving as an angel investor and strategic partner for early-stage companies. I do it under my own name now, openly, no more anonymity protocols. Sometimes I wonder if I should have handled it differently. If I should have told Marcus the truth years ago, forced the acknowledgement earlier, avoided the explosive revelation. But then I remember Saturday dinner. Stick to your little side projects. Real business is beyond you. Said to the person who owned 51% of his company, who'd saved him from bankruptcy, who'd provided every major strategic insight that drove his success. Sometimes the kindest thing you can do is stop protecting people from the reality of their own dependencies. I didn't destroy my brother's business. I revealed the foundation it was built on. A foundation he'd been standing on for 8 years without bothering to look down and see who was holding it up. Now he knows. Now everyone knows. And I'm done being invisible while being indispensable. Sometimes the most powerful thing you can do is simply stop hiding your power. And let people face the reality they should have seen all along.